Hi, this is Ma'am Pat again, and we are solving multiple choice on inventories taken from Intermediate Accounting, Volume 2 by Robles and Empleo. So we have solved up to MC 31 already in the previous video. So let us continue. Allow me to share screen. Okay, so we are now in MC 32. So continuing, the question is, how much is the gross profit on sales if the company uses the FIFO method? Okay, you were furnished the following data of your invest sales company relative to commodity Excel, and balance is the beginning inventory is 4,000 units. So to compute for the gross profit, we need to determine sales and cost of goods sold to arrive at gross profit. Therefore, our sales is this total. So we have 3,000 times 35. So that is 105,000. We have 2,000 times 36. We have 72,000. And 1,000 times 37 is 37,000. Therefore, total sales amounted to 105 plus 72 plus 37. So that is 214,000. Okay, the cost of goods sold. And because this is FIFO, that means that the first items purchased would be coming from the earliest acquisition or earliest stock, and total items sold were 6,000. Therefore, your cost of goods sold will be valued first 4,000 times 25. So that's 100,000. And the next 2,000 would come from the January 4 purchases. So with value of 26. So 2,000 times 26 is 52,000. So deduct 152. So 214 minus 152. Our gross profit is 62,000. Okay, so it's letter A. Okay, so 33. Every company recorded the following data pertaining to inventory X during January 2022. I know that we have already solved MC33. One of your classmates presented already the computation, but nevertheless, for purposes of your review, this is using moving average, so that means we need to prepare your stock card. So we have the date, received, issued, and balance. Okay, so on January 1, our balance is composed of 3,200 at 8. So 32 times 8 is 25,600. And then January 12, we sold 1,600. So 1,600 will be valued. So this is your cost of goods sold still at 8. Therefore, 32 minus 1,6 is the remaining 1,600. Of course, the issuance will not change your unit cost. So that will still be valued at 8. So 1,6 times 8 is 12,800. Or you may deduct from 25,600 the amount of same amount, 12,800. So 25,600 minus 12,800 is 12,800. And then on January 22, we received 4,800 at 960. Therefore, 48 times 960 is 46,080, such that our balance will be 46,080 plus 12,800. So that's 58,880 and 16,000, the previous balance, plus 4,800. We have 20,800, and the new unit cost is 58,880 divided by 20,800. So that is, no, that's 1,600 plus, sorry about it, plus 4,800. So that is 6,400. Okay, so sorry for that. This is 6,400. So 58,880 divided by 6,400. That's 9 pesos and 20 centavos. Therefore, the new unit cost. So unit cost under the moving average changes every time there is purchase. So it's letter C. Then proceed to MC 34. Using the lower of cost and net realizable value, what are the unit inventory values for confidence and positive attitude? The management of goodwill enterprises has been using the lower of cost and net realizable value in costing its inventory. It maintains only 2 items of inventory as follows. We have confidence, we have 3 on hand, 300 units on hand, but we are just computing for the unit cost. Therefore, the cost is 22 each. Compute for net realizable value. Estimated sales price is 30 minus estimated distribution cost of 3, so that's 27. Normal profit is 10% of the sales price, and net realizable value is estimated sales price minus cost to complete, that is for work in process, minus cost to sell or distribution cost. There is no cost to complete, so we only deduct the estimated distribution cost, and that is 27. Between, therefore, 22 and 27, the lower of cost and NRV for confidence is the lower, which is 22. Then positive attitude, we have 2 on hand, 200 on hand. Cost is 55 each. Estimated sales price is 80. Estimated distribution cost is 28. And normal profit is 20%, so disregard. So 80 minus 28 is 52. Therefore, between 25 and 52, the lower of cost and NRV is 52. Therefore, the answer is 22 and 52. 22 and 52. So it's letter B. Okay, proceed to MC 35. How much is the total inventory value at December 31, 2022? So if it is only the inventory value, again, we are to determine NRV and compare it with cost. so that we have lower of cost and NRV. Total, lower of cost and NRV. Okay, so for H, we have 25, 1,000 units. We have estimated selling price of 40 minus 650. So that is 3350. Okay, unit cost is 25. So it's just between 3350 and 25, and lower is 25. So 25 times 1,000, that is 25,000. Then for O, unit cost is 42. Your estimated selling price is 48. 48 minus 12, that is 36. Compare it with 42, therefore the lower is 36. Multiply 36 by 2,000, so that is 72,000. And then for P, we have 120. Your selling price is 190 minus estimated disposal cost of 25. So that is 165. But the lower is 120. So this one is lower. Therefore, lower of cost and NRV is 120. So 120 times 3,000, that is 360,000. And for E, unit cost is 18. So estimated selling price is 26 minus 3. So therefore, your NRV is 23, but the lower is 18. Therefore, that is lower of cost and NRV, that's 18. And 18 times 4,000. So that is 72,000. Therefore, we have 25 plus 72 plus 360 plus 72. Your inventory value is 529,000. Okay, we proceed to MC36. The question is, what is the cost of inventory immediately before the fire? On March 31, 2022, the store inventory of Gotesco Corporation was destroyed by fire. The company's markup on cost. Please take note that the markup is on cost. Therefore, sales minus cost of goods sold is your markup. So that is your gross profit. This is 40%, but that is based on cost, and therefore sales must be 140%. The following information was obtained from available records. So we have inventory January 1. We have 600,000. Add purchases from January 1 to to March 31, immediately before the fire. So that is total of 400 plus 500 plus 600. So that's 1,500,000. Therefore, our total goods available for sale is 2,100,000. Deduct cost of goods sold. Your sales for this period. So we have 640 plus 750 plus 850. So that's 2,240,000. So 2,240,000, the markup is based on cost. Divide it by 1.4. Therefore, that's 1 million. So divide this by 140%. So it's 1,600,000. so that your inventory before fire is 500,000. Okay, next. We have MC 37. What is the amount of inventory overage or shortage? Alimos accounting records indicated the following information. So you are given the information at the beginning of the year, January 1, 2022, and at the end of the year, December 31, 2022. All sales and purchases are on credit. Alimos gross profit sale based on cost, so this is gross profit rate based on cost, has remained constant at 25%. Therefore, to compute for cost, you divide sales by 125%. Okay, but purchases and sales were not given, so we will make use of purchases, accounts payable to arrive at purchases, and let us make use of accounts receivable to arrive at sales. So for purchases, we have accounts payable. We have January 1 balance of 300,000 and December 31 balance is 250 and paid during the period is 2,550,000. Therefore, purchases is the missing item. So 2,550,000 plus 250 minus 300. Therefore, our purchases during the period amounted to 2,500,000. Do the same thing for AR to compute for sales. So January 1 balance of AR is 700,000. Its December 31 balance is 900. Collections during the period amounted to 2,800,000, and therefore 900 plus 2,800,000, that's 37 minus 700. Your missing item here is sales amounting to 3 million. Okay, so to compute our inventory, so inventory January 1 is 180,000. Add purchases determined using your accounts payable. So that's 2,500,000. Therefore, our goods available for sale is 2,680 minus cost of goods sold. So we use sales of 3 million. Your gross profit based on cost is 25%. So you divide sales by 125%. So 3 million divided by 1.25 is 2,400,000. Therefore, inventory before shortage or overage must be 280, but inventory per count is 110. That means we have missing inventory, which is a shortage amounting to 170,000. So if it is a shortage daw naka-parentheses, so that means it's letter C. And MC38, what is the cost of the inventory lost by fire? So what do we have? We have On December 31, 2022, Georgetown Corporation lost all of warehouse inventory by fire. Data for years 2020, 2021, and 2022 follow. Goods with selling price of $150,000 were sent on consignment to Atlas Trading. As of December 31, 2022, these goods were unsold and is still in the possession of Atlas Trading. On December 28, 2022, goods costing $95,000 were purchased by Georgetown Terms FOB shipping point. The goods are still in transit but were properly recorded by Georgetown as purchases during 2022. What is the cost of the inventory lost by fire? Okay, so we will compute first for the gross profit ratio for 2020 and 2021. We will determine the average. So for 2020 and 2021, we have beginning inventory, add purchases, deduct ending. That will be your cost of goods sold. Okay, so for 2020, beginning inventory is 425. Purchases during the year amounted to 1320. Deduct ending inventory, so that will be 705, this one. So our cost of goods sold plus 1320 minus 705 is 1,040,000. So compute for the cost ratio. That is cost divided by net sales during the year. Okay, so that's 1,040,000. Net sales amounted to 1,700,000. So that is 61. 61%. For 2021, beginning inventory is 705, whereas purchases amounted to 1365. Deduct ending inventory, which is the inventory January 1, amounting to 520. Okay, so 705 plus 1365 minus 520, that's 1,550,000. Okay, so divide it by 2 million net sales in 2021. So that is 77.5%. Just validating. Okay, so your average cost ratio is 61 plus 78 divided by 2. Again, that's 1,550 divided by 2 million. So that's 77.5, whereas 1,040,000 divided by 17 is 61.2. So 61.2 plus 77.5 divided by 2, that is 69%. Okay, so assuming that we will be using this average gross profit ratio in the past year, to compute for the cost of the inventory lost by fire. We may also use the overall gross profit ratio. We'll just go back later. Okay, so therefore, beginning inventory for 2022, yeah, is 520. Add purchases of 2180. I see my book. Sorry. So purchases amounted to 180. Therefore, total goods available for sale is 27. Okay, deduct cost of goods sold. Assuming that we are to use the average gross profit ratio that is 69% times sales of 2022, 2,500,000. Okay, so that's 1,725,000. Deduct it from 2,700,000. Therefore, inventory before the fire is 975. So goods with selling price of 150,000 were sent on consignment to Atlas Trading. As of December 31, 2022, these goods are unsold and is still in the possession of Atlas Trading. So we have goods out on consignment. So that is 150,000 times, using the ratio, 69%. So that is 103,500. And on December 28, 2022, goods costing 95,000 were purchased by Georgetown Terms FOB Shipping Point. The goods are still in transit but were properly recorded by Georgetown as purchases. So we have goods in transit amounting to 95. So 975 minus 103,500 minus 95,000. We have 776,500. Which is none among the choices. Therefore, instead of using, let us try another method. Instead of using the average gross profit, let us use overall gross profit. So compute for overall GP for 2020 and 2021. Okay, so we have beginning inventory for 2020. So we will take 2020 and 2021 as only one period. Therefore, the beginning inventory is 425,000. So we have 425. add purchases for the 2-year period. Your total purchases amounted to 1365 plus 1320. So that is 2685. So total goods available for sale is 425 plus 2685. That is 3,110,000. Deduct ending inventory. So your ending for the 2-year period must be the ending of 2021, which is the beginning of 2022, and that is 520,000. Therefore, your cost of goods sold is 2,590. So your cost ratio here will be 2,590 divided by total sales for 2020 and 2021. So your total sales for 2020 is 1,700,000 plus sales in 2021, 2 million. So that is 37. Let us try. So 2,590 divided by 37, we have an exact gross profit rate of 70%. So if we are to use overall GP here, then your cost of goods sold here will be 70%. This one. It will be 70% of sales for the year 2022, which is 2,500,000. So that's 1,750,000. So we have 2,750 minus 1,750. Therefore, we have inventory before fire of 1 million. Then your 150,000 will be multiplied by 70%. This one, instead of using 69, you are to use 105. And then goods in transit is 95. So 1 million minus 105 minus 95, your inventory so 150 times 0.7 is 105. And then goods in transit is so 1 million minus 105 minus 95. That's 800, which is also not among the choices. So let me see. Did I miss anything? No, this is 2,700,000. Okay, so allow me to correct. So this is 2,700,000 ulit. 2,700,000 minus 70% of 2 million, 2.5. So 2,500,000 times 0.7, this is 1,750. So this is 950. Okay, 950 minus 105 minus 95. Again, 950 minus 105 minus 95. That is 750,000. Okay, so answer is letter B. That means therefore, I made an error here at 2,700,000. Okay, so this is it. If there is no indication as to whether you are to use the average gross profit for the last several years, whatever years were given, you may use the average gross profit. If you fail to arrive at the answer based on the multiple choice, then you may use the overall gross profit ratio. In the overall gross profit ratio, the previous years, 2020 and 2021, as given here, will be taken as one. That means, therefore, that the beginning inventory is the beginning of 2020, and the ending inventory is the ending of 2021, which is the beginning of 2022. So that is on a trial and error basis. But if this is supply the answer, both answers will be considered as correct whether you compute it based on average gross profit ratio for 2020 and 2021 or based on overall gross profit ratio. Again, to compute for your overall gross profit ratio for 2020 and 2021, your beginning inventory is the beginning of 2020. Add purchases for both years, 2020 and 2021. So that will be your goods available for sale, deduct ending inventory. Your ending inventory here is 2021 ending inventory, which in the problem is given as inventory January 1, 2022. Therefore, that is your cost of goods sold overall for the 2-year period. Then your cost ratio will be computed by dividing the overall cost of goods sold for the 2-year period by the total net sales for the 2-year period 2021-2020. So that's 1.7 and 2 million. So that's total of 3,700,000. Therefore, your overall gross profit ratio is 70%. So you repeat the process. Beginning inventory in 2022, because you are now applying the overall gross profit ratio for 2020 and 2021 to determine the ending inventory for 2022. Therefore, you do it the usual way. Beginning inventory 2022 is 520,000, add purchases of 2,180,000. So therefore, your goods available for sale is the same as we computed, 2,700,000. Now, the 69% will have to be revised to 70%. So deduct cost of goods sold, which is 2.5, which is the sales for 2022, 2.5 million times 70%. So that's 105. That's 1,750,000. So 2,700,000 minus 1,750,000. Your inventory before the FAR is 950,000. Deduct goods out on consignment, but the goods out on consignment, you have to be consistent on the use of the gross profit ratio. The goods out on consignment were stated on at selling price. So you have to convert that into cost. So if this one is not applicable anymore, as this is average gross profit ratio, you use the newly computed 70%. So 150,000 times 70% is 105,000 minus the goods in transit, which is given at cost. Purchase FOB shipping point 95,000. So therefore, using the overall gross profit ratio, the cost of missing inventory, the inventory lost by fire, is 750,000. Again, if The examination is in the supply the answer format, and there is no indication as to use either the simple average for the past year or the overall gross profit ratio. Then both answers will be considered correct. So if you use the simple average, our answer will be simple gross profit ratio 776,500. But if we use the overall gross profit ratio, our answer will be 750. And because this is multiple choice and 776,500 is not one of the choices given, that means therefore you have to shift your computation to overall gross profit ratio. So you are at the mercy of the examination. Okay, proceed to MC 39. On September 15, 2022, a fire destroyed significant portion of the warehouse inventory of National Wholesale Corporation. The following information was available from the records of the company. The company determined the cost of inventory not damage, so not damage, and this is stated at cost daw, 69,738. Damage inventory of national which cost 15,000 at an estimated realizable value of 5,000. Okay, so your first problem, is there any gross profit ratio given in 2021? If there is none, that means you have to compute for it. Okay, so we have net sales. Okay, so we stated in our discussion that for purposes of computing the gross profit ratio, we do not consider sales allowances, but we considered sales returns. We also do not consider sales discounts. However, in this case, sales returns and allowances are combined. So that means we need to consider. So your net sales for the year 2021 is 530,180 minus 5,980. Again, 530,180 minus 5,980. So that is 524,200. Deduct cost of goods sold. So we have beginning inventory. So our beginning inventory is 120, 160. Add net purchases. For purchases, everything is considered. So that is 405, 476 minus 11, 110. Again, that's 405. Compute with me. 476 minus 11, 110. So that is 394, 366. So total goods available for sale is 514, 526. Deduct ending inventory. And your ending inventory is the beginning for 2022. That is 105,650. So 514,526 minus 105,650. Your cost of goods sold is 408,876. So our gross profit is 115,324. So your GP ratio, you may compute for the GP ratio or cost ratio. So 115,324 divided by 524,200. Okay, so that is 22%. That means therefore that your cost ratio is 78%. 100 minus 22%. Okay, so we now have inventory January 1, 2022, which is 105,650. Add net purchases. So net purchases is 378. We have 378,245 minus purchase returns and allowances of 10,295. So that is 367,950. So our goods available for sale is 473,600. Deduct cost of goods sold. So that is based on sales. Your sales is 450,200 up to the date of fire minus sales returns and allowances of 51. Multiply this by 78%. Again, 450,200 minus 51 times 78%. So that is 347,178. Therefore, deducting this from 473,600, the inventory before fire is 126,422. The company determined the cost of inventory not damaged to be 69,738. So undamaged. That is at cost. Deduct because we are looking for inventory destroyed. So this is 69,738. And damaged inventories, the damaged inventory will have to be deducted at lower of cost and NRV. So cost is 15,000, but estimated realizable value is 5,000. That means that the 10,000 will be absorbed and considered as additional loss. So 126,422 minus 69,738 minus 5,000. The inventory destroyed by fire is 51,684. Sorry, I lack a space already. So this is inventory loss. We have 51,684. Again, from the inventory before FAR, the undamaged goods will have to be deducted at cost. If the selling price is given, you convert that into cost, whereas the damaged goods will have to be deducted from the at the lower of cost and NRV. Okay, so we go to item 40. On September 30, 2022, a flash flood damaged the warehouse and factory of Walter Mart Incorporated. The question is, what is the value of the work in process lost from flood at September 30, 2022? Again, on September 30, 2022, a flash flood damaged the warehouse and factory of Walter Mart Incorporated, completely destroying its work in process. So any work in process that we may compute at September 30, 2022 is the fire loss. There was no damage to either raw materials or finished goods since these were stored at in an elevated section of the warehouse. A physical inventory taken immediately after the flood subsided showed the following. We have raw materials, 740, finished goods, 1,310,000. So these are the ending. Inventory at January 1, 2022 consisted of the following. We have raw materials, we have work in process, these are beginning inventories, and finished goods. The company's profit margin for the last several years is 25%. Sales for the first 9 months of 2022 were 4 million. Therefore, to compute for your cost of goods sold, you multiply sales for the first 9 months by 75%. So let us do that now. So your cost of goods sold is actually 75% of 4 million because gross profit in the absence of any indication is based on sales. So that means therefore that this is 3 million. Raw materials purchases were 280. Direct labor cost for the period amounted to 960. Manufacturing overhead is applied at 50% of direct labor cost. So how do we compute? Do not make any more modified formula. You just use the template for the computation of your cost of goods manufactured and sold. So therefore, we start with raw materials inventory. January 1, which is 400,000. Add purchases. Raw materials purchases were 1,280,000. Therefore, total materials available for use in the production is 1,680,000. Deduct raw materials and that is September 30. They were undamaged. We have 740 as given there, this one. Therefore, raw materials used, we have 1,680 minus 740, that's 940. Add the two elements of cost. We have direct labor. And direct labor cost for the period amounted to 960. And applied factory overhead. And applied factory overhead is 50% of direct labor cost. So that's 50% of 960,000. Which is 480. Therefore, our total manufacturing costs We have 480 plus 960 plus 940. That's 2,380,000. Add work in process beginning and work in process inventories at January 1 consisted of the following. We have taken raw materials, work in process is 1,100,000. So this is your total goods placed in process, which is 3,480,000. Deduct work in process and which we will increase, which we do not know now. Therefore, this is your cost of goods manufactured. Then we add finished goods beginning, and finished goods beginning is 1,500,000. This one. And deduct finished goods and finished goods after the flood subsided is 1,310,000. Therefore, the difference is your cost of goods sold. Sorry for this. Your cost of goods sold is 1,500,000. No. Your cost of goods sold is what we computed, 3 million. That's 75% of sales. Am I correct? So sales amounted to 4 million. Gross profit for the last several years is 25%. So 75% of 4 million is 3 million. Therefore, we work back. So 3 million, we work back now. Add back 1,310,000 and deduct 1,500,000. And therefore, work in process, no, cost of goods manufactured must be 2,810,000. So what amount was deducted from 2 million, from 3,480,000 to arrive at 2,810,000? Therefore, it's 670,000. So the inventory that is destroyed by fire is 670,000. Again, you just compute your cost of goods sold in the usual manner, place all the information provided, then work back to compute for work in process end. And that is 670. Now, if there is any undamaged work in process, you just deduct it from 670 to arrive at fire loss. Therefore, 670 is letter C. And we go to MC41. Cybers Trading uses the retail inventory method to estimate inventory. The following information was obtained from the accounting records for the year ended December 31, 2022. You are given some information at cost and some information at retail. How much is the cost of inventory pilferage if the physical count revealed an ending inventory at retail of 780,000? Okay, so we maintain two columns at cost and at retail. Okay, so January 1, inventory. We have 617,000 purchases for the period amounted to 1,281,000. purchase returns. Deduct. Where are we? 1281, 21,000. This one. Freight in. So at cost for purchases, everything is considered. 31. Again, we have inventory January 1617, purchases 1281, purchase returns 21, freight in 31. At retail inventory January 1 is 1,057,000. Purchases amounted to 2158. Purchase returns amounted to 35. Of course, there is no equivalent for freight in. Therefore, our goods available for sale. We have 617 plus 1281 minus 21 plus 31. So this is 1908. And for retail, that's 157 plus 2158 minus 35. That's 3180. Okay, so compute for your cost ratio, because what is required here is cost. So your cost ratio is based on the relationship between goods available for sale at cost and goods available for sale at retail. So that is 60%. Deduct. Sales, net of sales returns. So that is 2365 minus 62. So 2365 minus 62. Tama ba to? That is 2303. So ending inventory at retail. So deduct it from 3180 is 877. Ending inventory per count at retail is 780. Therefore, you have shortage at retail amounting to 97. But that is not what is asked. What is asked is cost. So cost of inventory pilferage. Pilferage is nanakaw. So apply the cost ratio. So that's 97,000 times 60%. So that is 58,200, which is letter C. Be careful. Determine whether the pilferage is stated at retail or is stated at cost. Here, what is being asked is the cost of inventory pilferage. And number 42, the following data is available for Corona trading. What is the cost of goods sold before loss on inventory shortage? So do the same thing at cost and at retail. We have January 1 inventory. We have 47,075 and 70,030. 0.25. We have purchases net 213,327 and 306,375. Freight in, we have 34. We have net markup, that is 320,500 minus 18,900. No, that is, sorry for this. So we have net markup. Be careful. So that's 18,900 minus 78. So that is 11,100. Then we have markdown. And your markdown is 10,640. Deduct. Be careful. So we have 47,075 plus 213,327. Add freight in, na-omit ko. And freight in amounted to 34. Therefore, this is 263,802. Check again. Okay, so that's 263,802. At retail, that's 70,025 plus 30,306,375 plus markup net 11,100 minus 10,640. So this is 376,860. Okay, so develop again your cost ratio, which is 263,802 divided by 376,860. This is 70%. Okay, so after that, deduct sales. That's the only one. The question is, what is the cost of goods sold before loss on inventory shortage? So deduct sales. And sales amounted to 320,500. Therefore, your ending inventory at retail is 56,360. Your physical inventory at retail is 39,390. Therefore, missing at retail is 16,970. Let us answer. Question, what is the cost of goods sold before loss on inventory? Shortage, so that is goods available for sale. 263,802 minus, so ito, pwede rin yan. So your cost of goods sold is actually 320, 500 times the ratio of 70%. So if that is straight. So that is 224,350. Whereas the missing inventory at retail is 16,970 times 70%. So that's 11,879. Okay. Again, this is your computation. So in the retail inventory method, what you need to develop first is the cost ratio. You compute for goods available for sale at cost and at retail. Okay, so MC44, what is the estimated cost of ending inventory? De parehas din. Pwede na tayong dumiretso dito. At cost and at retail. So we have beginning inventory at cost and at retail, purchases at cost and at retail. We have net markups. We had net markdown. So that is goods available for sale at cost and at retail. So we have 23 plus 120, that's 143,000. Whereas for retail, that's 60 plus 220 plus 20 minus net markdown of 40. So that is 260. Again, develop your cost ratio. Cost ratio is 143 divided by 260. So that is 55%. Okay, minus sales revenue amounting to 180. Therefore, 260 minus 180 is 80,000. And at cost, this is your ending inventory at retail. And at cost, that is 55% times 80,000, which is 44,000. And number 45, what is the adjusted profit for the year ended December 31, 2022? So we are looking for 2022 profit. So as reported, profit reported in the 2022 profit and loss before adjustment for the given items is 600,000. Then ending inventory was overstated. So ending inventory was overstated. It has a direct effect on profit. Therefore, it's overstated. So profit is also overstated. Beginning inventory was understated. So it's inverse. If beginning is understated, that means that profit is likewise, profit is overstated. So we have to deduct 4,000. Then 100,000 worth of merchandise was purchased and received towards the end of 2022 and included in inventory. So that means it was received during the period. The purchase was recorded in 2023 when payment for the goods was made. Therefore, purchases for 2022 were understated. And because purchase is an expense, that means if it is understated, your profit will be overstated. So we deduct 100,000. Therefore, we have 600 minus 10 minus 4 minus 100. Correct profit for the year is 486,000. And I think that's the end of the multiple choice. Okay, so study very well and view these videos, then you are ready for the examination. Please develop critical thinking, understand and comprehend the items given, the information given in your examination. Okay, so I will stop sharing now and I will stop